I'm Deborah Uroda, and you're watching It's Your Money with Brad Tafoya of Tafoya, Barrett and Associates. Last time we talked about the 20% qualified business tax from the new Tax Cuts and Jobs Act, but I understand that there's a lot of misinformation and misconceptions out there. What are some of the things that we really need to know?
What we really wanted to clarify this time is to let people know that if you own a business, almost regardless of that structure, you're going to qualify for this deduction. In addition to that, if you own a rental property that's reported on Schedule E, you may qualify for this deduction. If you own a farm, operate a farm, report that on Schedule F, you may also qualify for this business deduction.
And I understand that there's also some differences for businesses that are in the manufacturing industry. What are those?
If you're not in a service business, you're making something, manufacturing something, and your income is over those threshold amounts, 315 or 150, then some new limitations come into play. And it's complicated, we don't want to go into the details here, but just know that there's some limitations and qualifications out there that have to be met.
I thought this was supposed to make the tax law simpler and easier to understand. What are some of the benefits of this tax law, and what can we hope for?
Well, you know, the great thing about this new business deduction is that if you qualify and you meet these limitations, it can be a very powerful deduction. But you're right, it's very complex, and it was done in a hurry. It was rushed. And so as we dig deeper into this, as we learn more and read more, we're finding that there may be some unintended consequences by Congress that are just popping up. If you have the same business, the same fact pattern, the same taxable income, same everything, and that business is a Schedule C sole proprietorship, or an S corporation, or a partnership, you could get a different deduction just depending on the structure of the business. And depending on what Congress does or doesn't do with these potential fixes, structuring your business, the entity structure, is going to be more important than ever before.
Yeah, I understand that. And let's talk about something that is really a good news for many businesses out there. That's investing in your business, and there are some significant changes in capital investment.
Yes. In 2017, the maximum deduction you could take was $500,000. That has been increased under the new tax law in 2018 to $1 million.
Wow, that's double.
Yeah.
And then there's the bonus depreciation. That is also pretty significant as well.
Yeah, so in 2017, bonus depreciation, the maximum you could take there was 50%. So you buy a new asset, you take bonus depreciation equal to 50% of the cost of that asset. That was increased in 2018, will be increased to 100%. 100%, so 100% bonus depreciation. Under the old law, it had to be a new asset, so it could not be an asset that somebody else had used before. It had to be completely new. But under the new law, for bonus depreciation, both new and used assets will qualify for it. The main difference between bonus depreciation and Section 179 is that with bonus depreciation, you can actually have a business create a net operating loss. They can take their income below zero. Section 179 does not allow you to do that. You can only take it down to zero.
And what's the advantage of taking it below zero?
What can happen is if you have a net operating loss, the IRS allows you to take that net operating loss and in some cases carry it back to other years where maybe you had more income, or carry it forward to future years where you're going to have income. And so that could be a beneficial thing.
So what I'm hearing is that it's very important to sit down with someone and plan this out over a couple of years and not just 1 year at a time.
That's very true. One of the things that we do as accountants is every year we help our clients make that decision. Are we going to take regular depreciation? Are we going to take Section 179? Are we going to take bonus depreciation? And we look at all of the factors and we try to look down the road a couple of years and decide that.
Well, be sure to check with a tax advisor or contact Brad Tafoya at Tafoya Barrett Associates. Thanks for watching this edition of It's Your Money.